Good day, Prof. Jerome. Let me introduce myself. I'm Lata. We are here, Group 5, and my team members are Mr. Kesigan Nadarajan, Mr. Dinesh Kumar Balakrishnan, Mr. Priya Chandran, Mr. Tinagar Ramakrishnan, and myself. I'm Lata. Okay, we are excited to be here today and would like to introduce ourselves. Each member brings an unique set of skills and experience to the group, allowing us to work together efficiently and effectively. Today, we would like to present our corporate finance assignment, which will cover part 1, consisting of 5 questions, followed with part 2, which we will touch on company analysis. Now I'm passing to my next team member to answer question 1.
Hi, good day. I'm going to answer for question number 1, but before that, we have two parts of this presentation. Part 1 covers 5 questions, and then part 2 is about company analysis, and we are working on Panasonic Malaysia Berhad. So, for question 1, it is about ROI of SEC Berhad. So, ROI is a financial metric used to evaluate the profitability and efficiency of an investment. It also measures the gain or loss generated on an investment relative to the amount invested. Various factors can affect the ROI of an investment, including the following, such as economic condition, industry sector performance, company specific factors, time horizon, risk profile, investment strategy, and diversification, and so on. Right. So we also have for SEC the effect on return on stockholders equity. Stockholders equity helps business owners and financial professional to determine the financial health of business. Shareholders equity is equal to a company's assets minus its debt. So less time of average collection period has positive impact on return on stockholders equity. Uh, for SEC, Berhad can also compare its return on stockholders equity with its competitors to gain a better understanding of how they are performing compared to their competitors regarding average collection period lah. So next one, effect on use to buy back its common stock at book value. Early collection period has positive impact on purchasing of common stock. Is a type of stock that represent a company's equity. It also comes with voting rights plus the potential for dividends and capital gains. Another part that we would like to touch is impact on debt ratio. Debt ratio measures how much leverage is used by a company in terms of total debts to total assets. Early collection period has positive impact due to quick conversion of debtors into cash. That's all from my part for question number 1. I will pass this to question number 2 to the next presenter. Thank you.
Hi, I'm Dinesh. I'll be answering for question number 2. To evaluate the impact of each financial decision on South Berhad current ratio, quick ratio, and debt to equity ratio, we need to analyze the changes in the relevant component of the balance sheet. The firm needs to examine each decision separately, such as current ratio, quick ratio, debt to equity ratio. Note that for a comprehensive analysis, it would be beneficial to have additional information such as the value of current assets, current liabilities, marketable securities, inventories, debts, and equity before and after each financial decision. The current ratio of 1.31 indicates that the company has $1.31 in current assets for every $1 in current liabilities. Subject suggesting a relatively healthy liquidity positive position. The quick ratio of $1.08 further support this, indicating that the company has sufficient liquid assets to cover its immediate liabilities. However, the debt and equity ratio of $2.25 suggests that the company has a higher level $2.25 of debt relative to its equity, which may pose potential risk and impact its financial stability.
Hi, Prof. It's me again. Okay, I'm coming for the answer of question 3. To determine the estimate additional financing required for the expansion program, we need to consider changes in net working capital, the net income, and the depreciation of expenses as shown in the slides. Okay, so based on the calculations, the company would need around 67 million in additional financing if it decides to go through with 200 million expansion program. This additional financing would be used to cover the changes in net working capital, net income, and depreciation expenses that are expected to occur during the expansion program. The company's management will need to be carefully evaluate the potential return on investment and assess the feasibility of obtaining this additional financing before making a final decision. Thank you, Prof.
I'm Apresh Chandran, will be representing for the question number 4. The answer will be follows. The calculate how much Joseph has saved at the end of each of the 10 years. We need to consider the total cost of Lema education and the push. Firstly, let us calculate the total cost of Lema education. She will be in college for 4 years. So she needs 25,000 at the beginning of each year. Therefore, the total cost of Lema education will be 100,000. Next, Joseph has 10,000 saving. Since the 10,000 saving will be untouched for the next 10 years, we can calculate the future value of this amount with the annual interest rate of 7% after the tax. We also need to consider that Joseph will inherit amount of 25,000 in the 9th year. To estimate how much is saving Joseph need to be prepared for each year, we need to work out the total saving needed that in total education cost, portion cost, future value of the saving, future value of the inheritance, that is 100,000 plus 55,000 minus of 19,671.55 minus of 26,750 equally to 108,578.45 for 10 years. In conclusion is that Joseph need to save approximately 10,857.85 at the end of each of the next year. That's all for the question number 4. I will pass it to my next presenter. Thank you.
Alright, good day, I'm Dinagaran here. I'm here to present for question number 5, which is about Mr. Magiswara, who wants to accumulate a sum of money where he could look at an investment for about 15 years and collect the returns in another 15 years from then. Alright, Mr. Magiswara, current age is 30 and he is looking at 60 to collect his investment. Alright, and the present value that he's looking at would be 100,000 ringgit per year. So the interest rate is 12% for the first 15 years, and the next 15 years he will be collecting 10%, right? And the saving period will be for only 15 years. So to calculate the amount Mr. Magiswara must accumulate by the time he reaches the age of 45, we use the concept of the future value of an annuity. If you look at the future value calculation, it's about 100,000, 12% interest, compounded interest, and then followed by will be 10% interest.
So Mr. Mageswara has to accumulate approximately 2.764.252 million by the time he reaches the age of 45. This will make him get an income of 100,000 per year from the time he's at the age of 60 up till the age of 80. Alright, and to start off with, Mr. Mageswara is also having a $10,000 saving. So approximately Mr. Mageswara has to save about 19,309.76 cents at the end of each year for the next 15 years to achieve his retirement goal. Thank you.
Hi, it's me again. I'll be presenting for part 2, company analysis. Based on Panasonic Manufacturing Malaysia Berhad, located in Shah Alam, Selangor, the net income for the company is $51,511, while the preferred dividend amount to $51,426. The net asset per share for the company are 12 ringgit 60 cents. Additionally, the gross dividend rate is 83%. The calculation of earning per share is done by subtracting the preferred dividend from the net income, resulting in a value of 85. Additionally, the dividend rate is expressed as a percentage of is equal to 83%. The return of shareholder fund for the given period is approximately 6.70 cents. This indicates that for every dollars of total shareholders equity, the company generates of a return of $6.70 in earning after taxes. The earning per share for the company is calculated by dividing the net profit of $51,511 by the numbers of common shares outstanding, which is 607. This calculation helps investors assess the profitability of each individual share and can be used as a key metric in evaluating a company's financial performance. The net asset per share can be calculated by dividing the value of a single share by the total number of shares outstanding. In this case, the net asset per share equals to 10 divided by 0.79. The dividend rate is calculated by dividing the annual dividend per share by the current market share price. In this case, the divided rate is equal to 1000 divided by 12. In addition, Panasonic's strong financial performance in 2022 can be attributed to its effective cost management, strategic and successful product diversification efforts. This factor has contributed in increased market demand and customer satisfaction, further enhancing the company's overall profitability. Sincere thanks from Group 5. Thank you.